Hello everyone and welcome to today's morning report. Chart appraisals on Friday the 23rd of September with me, Richard Perry, market analyst at Hantec Markets. We've got relatively subdued start to the morning session on the European trading stocks. The equity markets are all trading slightly lower, between sort of 1.25% lower. The dollar's rebounded actually. Since the FOMC, the dollar has come under a bit of selling pressure. The FOMC sort of didn't hike rates as expected, and they sort of alluded towards December, but they did sort of cut back the speed of the potential hiking cycle, and also just mildly reduced their projections for economic growth as well. So the market took that as relatively sort of disappointing, really, interestingly enough. And subsequently the dollar came under a bit of pressure since then, just sort of lower certainly on Wednesday and then again today, but mildly sort of rebounding today, and it's sort of unwinding some of yesterday's weakness, but still obviously the legacy of that Fed decision is there in the market. You look at these sort of treasury yields, they basically haven't really moved, have they? Certainly not on the 2-year. 10-year slightly lower, and that I suppose reflects the fact that the Fed's less hawkish in its trajectory of tightening. But it's sort of a slightly wishy-washy Fed meeting, really. Nothing too significant in terms of market direction on the back of it. I mean, Euro especially, I'll sort of talk through in a bit, but Euro especially has not really gained any real direction whatsoever. Bit of sort of dollar-yen weakness on the back of the yen, the BOJ and Fed decisions, but ultimately nothing too significant in terms of the direction that we've got out of the Fed. So it's pretty much the takeaway there. We had some oil price strength in the last few days. We had the sort of that Fed disappointment, arguably, and also the larger than expected oil inventory drawdowns on the EIA report, but it's just mildly unwinding some of that move today, about % or so down on WTI. But the sort of trajectory really would suggest that you still remain very uncertain in terms of this oil price, very up and down, very choppy moves that tend to last sort of a week or so before retracing again, and we're sort of still in this upward phase, I suppose you'd say. The markets will now start to look forward to that Algeria meeting next week of OPEC, non-OPEC countries over oil production limits. So that's the oil moves at the moment, but certainly the dollar is not really doing a great deal in terms of direction following on from that Fed decision, but a mildly sort of bearish bias, but nothing too significant really. So what are we looking out for today? Well, not a great deal. We haven't got a huge amount on the economic calendar today. We got the flash PMIs, the flash marketing and services PMIs for the Eurozone. We're sort of looking through them at the moment. It's sort of mildly better than expected on French data. The German data, again, sort of mixed really. Slightly worse on the services, which is a little bit of a concern. But the composite German data is sort of mildly down, and the Eurozone generally, they're due to the weighting, I suppose, of the German data. Eurozone data has been pulled slightly lower on the composite, so it's very mildly weaker than expected there. But we've got the US data this afternoon, if I can roll that forward. Flash manufacturing PMI this afternoon, basically in line with last month, very slightly weaker, 51.9. Other than that, we've got the Canadian inflation data at 130. CPI expected to just slightly increase on the headline, but slightly decrease on the core basis. So no real sort of sign of inflation sort of ticking significantly higher. Still remains around that 1314 area, as it has done for the last few months on Canadian CPI. So that takes me to my chart today, which is the dollar Canadian. So obviously that inflation data could easily have an impact on dollar Canadian, but going into that meeting, we're still seeing the legacy. But going into that data, we're seeing the legacy still of this weaker dollar, which has been sort of pulling dollar Canadian lower. And you can see here we're still stuck in this sort of medium term range that is not far off a long term range now, with these moving averages basically all flat. You're still playing it as a range play, I think, so 32.50 is the key resistance overhead. That got tested several times throughout the last sort of week or so, and then subsequently Wednesday falling sharply lower. That completed a small top pattern, but look at these momentum indicators, just corrective once again within the range. You've got a sell signal, near-term sell signal on the stochastics, that suggests corrective. You've got the RSI back from 60, basically goes between sort of mid-30s to just above 60 on the RSI, i.e. a complete range play. And we're back at 50 now, so dropping away. You've got the MACD lines dropping away. So it suggests that you continue to play it as a range play. Now, I've got in this chart also the 130 level, which has been relatively decent as a pivot line. Not massively. I mean, just only a few times in the last few months. So it's not really that accurate, but it did catch yesterday's low there or thereabouts and bounce. So you are still, to a certain extent, looking at that as sort of the midpoint of the range at the moment. Certainly 130. If you hold on to that, you're still reasonably positive. But I think you've got this sort of topping pattern here, which I can show you on the intraday hourly chart, which comes through much stronger. This topping pattern, which again 31.25, so around about 125 ticks, that actually implied the target of 130 figure, and that pretty much was where we saw yesterday before the recovery. But I think that the outlook is still corrective within this. You've got these near-term momentum indicators, MACD lines, sort of unwinding back towards neutral. RSI unwinding back towards sort of the 50 area, the 60 area, which is where it's sort of been tailing off in the last few days. So it could well be that this little rebound we're seeing could give you the next sort of selling opportunity. There's a sort of very minor resistance there around about sort of 30.85, which is sort of being tested at the moment, but around 31.25, as I said, that old neckline, and I think that would be a pretty decent area for a near-term selling opportunity, because I think you're going to still play out this range, and a retracement within this range, it seems to be what the charts are telling us at the moment. So I wish you good luck in your trading on dollar Canadian, and I will speak to you later. Thank you.